again, I hope, listen, it's too late to react at this point. If people bought at 65 or 60 or 50, it's too late at this point to react. In fact, I'm starting to look to buy some Bitcoin down here, and I have picked up a little bit, but just learn how when everyone is screaming about some direction, whether it's bullish or bearish, think for yourself and say, let me step back here and not just follow blindly like a lemming over a cliff. Yeah, sure. So I mean, rewinding back to October, November, there were a lot of signs that kept on bothering me in regards to Bitcoin. So number one, it was that the hype amongst retail investors. I mean, it was just every month was a new higher target. It was first 50,000, then 80,000, and it just, 100,000. Then you started hearing price targets of like 250 and 500 within months. And the hype was just palpable in that every small investor was just piling in. And if there's one thing in my 20-year career that I've noticed is that when that happens, it's usually the end of a move, right? It's when, I wouldn't say that the institutions get the suckers in, but in many situations, it's kind of like that, where the John Q. Publics that maybe have never heard of Bitcoin, they say to themselves, you know what? This is going to be easy money. And I've learned the hard way that there's no such thing as easy money in the stock market or in cryptocurrency. So, and it did go above briefly. There were two specific days where you closed above that April high of 2021. And what was interesting is the next days, it always came back below, right? It always sold back off. And I was pondering that, and I was thinking, what's going on here? Why is that happening? If there's so many buyers, how is it not able to just blow through this high? And the answer is there were big sellers selling, right? So you had big sellers coming in, and they were selling into that. They knew the hype was there. It coincided, interestingly enough, with the futures ETF, BITO, launching. And if you go back to 2017, what's so fascinating is that in 2017, the high of that cycle, when we hit about 20,000, that was when the futures launched for Bitcoin. So there was weird like symmetry there going on. In addition, I think the biggest thing is noticing the hype was very similar to the .com bubble. And ultimately, we saw the chart of Bitcoin starting to form the exact pattern that Amazon had in 2000, going into the collapse of the .coms, where Amazon went from 112 to about $6. Again, I hope, listen, it's too late to react at this point. If people bought at 65 or 60 or 50, it's too late at this point to react. In fact, I'm starting to look to buy some Bitcoin down here, and I have picked up a little bit, but just learn how when everyone is screaming about some direction, whether it's bullish or bearish, think for yourself and say, let me step back here and not just follow blindly like a lemming over a cliff. But we need to hear I would say, like, you need to hear 90% of people saying that, not just about 10. Right now, it's 10, maybe 15%. You need to see that switch totally to the opposite spectrum, and then you'll start to see a bottom, because that's what you saw in 2018. I still remember vividly in 2017, when it was a massive bull market, CNBC had the Bitcoin ticker on the bottom of their screen all the time, and they always talked about Bitcoin. And then once the collapse happened, all of a sudden, like in mid-2018, it vanished. And they didn't even talk about Bitcoin. It was like, we're not even going to mention it. And that was the signal, that bearishness that no one wanted to even talk about it. That was the signal that it was starting to become a viable option. So for me, it's looking at what Bitcoin represents. It represents a different monetary structure where you have a limited amount that can be ever mined versus the US dollar versus all the currencies of the globe, where governments can just print and print and print. And I think that's the bottom line. It's also that the adoption has started. You have major players out there. You have institutions starting to get involved. You have people starting to accept it as a form of kind of digital gold. Still has a long way to go to get there. But again, these are the things that I think the general world are yearning for. They're yearning for something where, if the governments continue to print, and even though the governments have stopped for now, I truly believe they will start again as soon as we get into a bad recession. There's a need for a place to store your money where it doesn't get diluted. Yeah, so let's take a look at the S&P chart. And the S&P today looks like it just closed down just very slightly on the day, or basically flat. But basically, you're at a point where you're going to get these bigger bounces. But notice how the trajectory of the market has now shifted to lower highs and lower lows. So this is clearly telling us that there's this kind of mountaintop in the market, and we're now starting to curl over. And if you think about it, it makes a lot of sense because the Federal Reserve was printing all the way up. I mean, basically, in all fairness, since 2009, even before that, they've been printing and stimulating. We had QE, QE1, QE2, QE2.5, and all the way up to the COVID massive stimulus. And if you look at the balance sheet of the Fed, by the way, and the amount of money in the system from when COVID began, it is like a vertical line up. It's scary how much money was just created there. But the bottom line is, with inflation at 8-9%, you have to realize that the markets were inflated, cryptocurrency was inflated because of the Fed, and now that's being deflated. If we get a recession, which is in my book for late 2022, early 2023, now you're talking about maybe seeing even more downside. I could see this low end right here. There's a trend line. You can see only COVID, the panic of COVID pierced it. Otherwise, you have this perfect trend line to these lows. And that would be my next downside target, which is right around 3,000 on the S&P 500. So we're talking like 20% lower potentially at bare minimum if we get into a little bit of a recession by late this year, early next year. So again, I hate to be a bear in this scenario, but in all fairness, everyone said don't fight the Fed. And that was when we were in a bull market, right? And it was what everyone said. And we heard it every which way. Well, you kind of have to say, okay, well, now don't fight the Fed. Well, what does that mean? Well, it means that they're pulling out the money and they want the stock market to come down. What they're trying to do is make people bring in the amount of money they have, or they have less money, which then will make them spend less, which will then bring down prices. And again, obviously oil coming down will help that as well, but they're really trying to get inflation down to a reasonable level. They've said 2%. They're not going to get it back to 2%, folks. The genie's out of the bottle. My guess is they'll get it to 4%, and then it's going to be sticky between 4 and 5%. But ultimately, Bitcoin, I think when the Fed kicks in those printing presses again, that's where the next bull market starts. My guess is we've already created, or we already have a breakout on gold, right? So if you look at this trend line here, this was your high in 2020. You had about a year and a half of consolidation, and then you finally broke out here. And now you've retraced, you've actually hit the scene of the crime, which is the retrace line. That's very normal in charts. And now you're kind of hovering here. In general, gold is think about it, gold is like the sloth, right? We know sloths move really, really slow. It's just a really mature asset, so it takes a long time to move. But I do think that it's slowly going to inch up, take out the highs here, and then be off to the races. Because again, I think slowly the markets are going to realize, investors are going to realize that inflation is not going back to 2%. The Fed has let the genie out of the bottle here. The Fed is not going to be easily able to kind of control the downward move in the economy, which likely means recession. It means fear. It means stocks aren't going to be the place to be as much anymore. And I think gold is an underinvested asset for a lot of hedge fund managers. Very, very underinvested because it doesn't get them the big returns that the Fed was able to generate by printing money in stocks like Tesla and all these other names. Silver continues to be one of the trickier ones in the near term to analyze. And again, the overall longer term pattern is still bullish. So you have this low pivot to this high pivot. And then for the last 2+ years, we've just chopped sideways. We're at the lower range. The reason why it's a little trickier is because not only is it a store of safety, which is great, like it's a goldish type play, but it's also industrial, right? So if you see a massive slowdown in the global economy, there's less demand for silver, and it kind of offsets that security of being in something like a gold. So I think overall, inflation, again, like I said, it's not going away. It may come down. I do think it'll come down, but it's not going away. So silver will perform over the next multiple years. But in the near term, to be honest, I'm not sure if it could dip down here. This would be a major support around $19 on silver. One of the things I will look for here is, let me just draw this line here. This would be a big breakout line. So you can kind of connect this high through here to here. So if silver can kind of get over 26, then it starts to really look like it might get that big breakout.